All right, well, Sarepta sliding again today and down almost 40% in the last two sessions after reporting a third death linked to its gene therapy portfolio. H.C. Wainwright analysts cutting their price target to $0 today. $0, saying they expect Sarepta's Duchenne muscular dystrophy drug to be taken off the market, leaving no intrinsic value in the stock. Mitchell Kapoor is behind the call. He's a senior biotech analyst at H.C. Wainwright. He joins us now. Mitchell, great to have you with us.
Thank you, Melissa.
When you say there's zero intrinsic value to the company, does that mean that the gene therapy that Levitus is based on is worthless at this point? There is no hope for that platform because the last death is a related gene therapy but not associated with that specific drug.
That's correct. All of these gene therapies use the same vector, and so we see the read-through from that death to the Levitus franchise. And so the FDA, after that third death, has asked Sarepta to voluntarily remove Levitus from the market. And so conceivably after this quarter, we could see no revenue coming in from that stream of the pipeline.
And financially, they've got a lot coming at them in terms of they don't have enough cash on their balance sheet effectively now to pay off the debt that is due in a couple of years. Is that correct?
So they have a revolver of about $600 million, but when you start talking about just scraping by in biotech, you're really not in a good position. So that's kind of the position they are financially in.
Mitchell, it's Karen. Thanks for being on. So it's an interesting report. How do you think it actually plays out? They're aware of their financial peril. What do you think happens?
Yeah, so right now, a lot of questions are coming in about, is this actually going to be pulled, or is the voluntary request just that, and basically Sarepta could keep marketing this drug. The way we see it is the voluntary request is not unusual, and it's typically reflective of a courtesy that the FDA extends to drug sponsors. And so we expect that the voluntary request would change into a demand in the near term. And you could see that because Marty Makary is looking to make an example out of drugs that are not safe at this juncture. He's the head of the FDA at this point. And so, we're expecting that to change into a demand. This drug was a drug with questionable efficacy, with a fine safety profile before. And now you still have that questionable efficacy, but now with the risk of death.
Mitchell, when you see the average investor or the investor that's not a biotech analyst, there's no way for them to avoid being invested in a name like this. What's your advice to retail investors and even institutions that are not biotech specific focused? How do you avoid being involved in this other than just buying an ETF, an XBI, or an IBB?
Yeah, I mean, I would definitely, I would caution investors against these names that are single product companies where you don't fully understand the science. I would say that, if there's a lot of risk of safety that is paramount in this industry. So, if you can get past the safety threshold, showing some kind of efficacy is where you get a drug to be utilized. And, if you don't understand those dynamics, I think investors should definitely stick to something like the XBI if they want to get into this space.